Okay, hi everybody, it's Geoff back with another video, this time looking at paper 2, the macroeconomics paper, and some thoughts on some likely key topics that might come up in 2024. Okay, so much to look at here. I'm going to divide this talk into UK and international. Obviously, macroeconomics covers so many areas, and as always, please revise the entire spec, including the little grey areas that you sometimes might miss. The spec's there for a reason. They can test anything they like, often on short answer questions. But thinking about the UK, I would expect a strong focus on the UK economy in paper 2 because so much has been happening. So let's look at some of those issues. The first is what's been happening, of course, with monetary policy and the use of higher interest rates as one policy to help control inflation. So assess both the cause and consequences of inflation and the use of higher policy interest rates to control inflation. In particular, assess alternative strategies, the use of fiscal and supply side policies to bring inflation down. Linked with that, if you're studying inflation, you're going to be studying unemployment. So the causes of unemployment in the UK, the big variations by region and locality. Obviously, in the last couple of years, major issues to do with labour shortages, particularly skilled vacancies, increased inactivity. We'll talk about that in a second, a bit more detail, and obviously the perennial problem of youth unemployment. Now, unemployment and inflation might be put together to ask you to use a kind of Phillips curve analysis to discuss whether the government can achieve both of those objectives at the same time. Harder, of course, given the inflationary shocks that we've seen in recent times and the rise of the risk of stagflation. Inflationary fears do seem to be ebbing away. Disinflation has happened in the last year or so. And so understand also the causes of disinflation in a modern economy, not all of which are linked to higher interest rates. We haven't had much in recent times about the UK balance of payments, in particular the growing trade deficit and current account deficit, primary and secondary income plus trading goods and services in the last few years. The trade data was clearly impacted and upset by Brexit. A lot of the trade information, a lot of the trade data was essentially stopped. But we're now starting to get the latest figures on trade, and the UK current account deficit has widened. So think about policies that might be used to improve our competitiveness, particularly in a post-Brexit world. They don't have to give you a question on UK trade. Of course, they could choose countries running big trade deficits, big trade surpluses, and what are the consequences of that. Underlying so much of the UK economy, and in particular the slow growth problem, has been underlying supply side weaknesses. So please do have a look at some of the supply side problems facing the UK, in particular low investment, low research and development, and the persistent productivity gap. So we talked about monetary policy. Supply side policies, also revise fiscal policy. How and can fiscal policy be used to meet macroeconomic objectives? Fiscal policies during the pandemic. And in particular, the whole issue of how best to control, if you want to, control the national debt, which is just a tad under 100% of GDP. So should the government be raising taxes, which it has been doing? It's cut some taxes but raised others. Or should it be controlling government spending, or both, as a way of controlling debt? Or can you grow the economy in other ways to bring debt down as a share of GDP? Now, particularly topical, I think, in the last couple of years has been the rise in the tax burden, the share of GDP taken by all taxes, direct and indirect. So you should definitely be aware of the concept of fiscal drag. That happens in particular when the government freezes tax allowances so that you earn more and spend more, you pay more in tax per year. A related topic, given the UK economy hasn't grown very quickly in recent times, in fact we had a shallow recession at the end of 2023, but slow growth and population increases mean that living standards have fallen in real terms. They've fallen by even more if you take real disposable income into account. So how do we measure, how do we calibrate living standards? What have been the causes of falling living standards in the UK and the consequences? What's happened to relative poverty, and also what's happened to measurements of economic well-being. We've had well-being questions in the past as short answer questions. Perhaps they might bring living standards and well-being into a longer question. So lots to talk about on the UK front, clearly. Here's a chart showing UK interest rates and inflation. Familiar chart, I hope, to all of you. The rise in inflation really picked off in the autumn of 2021 into 2022. This is one measure of inflation. Peaked essentially in the autumn of 2022 and has fallen back since. Disinflation. But you can see also what's happened to central bank interest rates, rising from 0.1% during the pandemic to a peak of 5.25%. So has the Bank of England been correct in raising interest rates to that level? Should they be kept at a high level, or should they start falling? And if they fall, how far should they fall? Many factors affect inflation, not just central bank interest rates. And keep in mind, of course, it doesn't have to be the UK. This chart shows monthly inflation since 2021 for a range of developed and emerging countries, including Brazil, India, China. And you can see that the inflation was largely global. Other countries suffered even higher inflation, including countries with a weak exchange rate, such as Turkey or Russia. But that inflation rate obviously picking up in countries like Brazil. In many, many countries, inflation went up in 21-22. Even in Japan, inflation became positive. They've broken out of deflation, which is probably a good thing for Japan. And this chart shows living standards. This is the blue chart shows the quarterly change in GDP, real GDP, barely any growth there. The orange chart shows the change in GDP per capita. And you can see that there's been no increase in GDP per capita for the last 7 quarters. Indeed, living standards at the end of this Parliament, as we nudge towards a general election, living standards in real terms, taking into account tax changes, so real per capita disposable incomes, are lower in 2024 than they were in the autumn of 2019 when the last election was called. And I talked about the tax burden, so this is quite an interesting chart showing taxes as a share of GDP. So you lump together all the taxes, VAT, income tax, national insurance, alcohol and cigarette duties, all that kind of stuff, and you measure it as a share of GDP. Taxation fell quite sharply during the 80s under the Thatcher government, climbed during Blair Brown, pretty stable about 36-37% until the pandemic, and then clearly a big jump in the tax burden, and it's continuing to rise. It's forecast to reach over 40% in 27-28. It's the highest overall burden of tax for over 70 years. What are the causes of that? What are the consequences of higher taxes in the UK? Unemployment has remained low. In fact, the trend has been downwards. The peak in unemployment in 2011-2012 was close to 9%, whereas during the pandemic, helped by furlough, of course, unemployment only rose to 5.5%. Well, I say only, but it's low. It's at or around 4%. But keep in mind, of course, that the figures are often inaccurate. There's big regional variations, and this is a really important chart. Economic inactivity has been rising again. And we thought we'd made progress in cutting inactivity, as we see in the chart here. But at the end of 2023, something like 21.5% or 22% of people of working age in the UK were inactive. People of working age who are not in work, don't have a job, and they're not looking for work. Now, that includes students, that includes people who've retired early, people with chronic illness, discouraged workers. But it's 9.5 million people in the UK of working age, but not active in the labour market. So think about the supply side policies or the fiscal policies that might be used to try to address that. So lots happening with the UK, a lot happening, so much to revise, but stick to the basics: inflation, unemployment, growth, trade, monetary, fiscal, supply side policies. If you do that, you can't really go far wrong. Paper 2, again, international. So lots and lots of international global economics. What's happening with trade? You know the theory of trade and the theory of protectionism, but assessing perhaps some of the possible gains and drawbacks of trade deals. UK and Australia, for example, or UK and Japan, or multilateral trade deals. MCA, Mexico, Canada, and USA. MCUSA. So that's quite a big deal. That MCA, of course, MCUSA replaced NAFTA. The Trans-Pacific Partnership, which the UK is scheduled to join in this summer. So the UK joining a multilateral trade agreement, which includes countries like Singapore, and Malaysia. Not much recent times on exchange rates. I would be expecting long form questions on exchange rates. Both causes of and consequences of exchange rate fluctuations, appreciations and depreciations, but also critically exchange rate systems. The choice of exchange rate system, floating, managed floating, semi-fixed, fixed exchange rates, or joining a single currency, is one of the most important decisions that any government can make. So evaluating the case for fixed versus free and managed floating exchange rates. It doesn't have to be the UK, it could be a developed country, such as Bulgaria joining the euro, or Croatia, which has already joined the euro, or it could be developing countries, the extent to which countries can use exchange rates to facilitate growth and development. Bound to be questions on development, clearly. Lots of things that haven't been tested really. Overseas aid hasn't really been tested in recent times. And debt relief. 2022 was a big year. 23 was a big year for countries, many of the world's poorest countries, running into significant debt problems, both domestic debt, high fiscal deficits, and external debt with a weak currency. So think about the causes of the impact of high external debt and the arguments for and against debt relief as one policy to reach basic or help basic development aims. Globalization clearly has been a major topic for many years, but of course there's the threat, the fear of deglobalization, a significant increase in tariff and non-tariff barriers, the rise of economic nationalism, including blocking FDI and merger control, particularly in the United States. So a shift towards economic nationalism has become apparent. So to what extent is the world deglobalizing? So have your analysis diagrams of tariffs and quotas and things ready to bring to a question evaluating the benefits and costs to countries affected by protectionism. And there might also be some questions on the European economics. Now, Brexit isn't specifically on the specification, but you need to be aware of the fact that the UK left the European Union several years after the referendum vote. What about the European single currency? No country has yet left that, and indeed Croatia has joined the euro, and Bulgaria is a European Union country, one of the poorer nations, but it's also expecting to join in the next year or two. What about the whole question of other countries looking to join the European Union single market? There was a question a few years ago on Turkey. Could Turkey come back? Other countries maybe perhaps looking to join the single market. A lot of examples very keen on external shocks, the extent to which what happens in the world economy is impacted by big demand and supply side shocks, including the pandemic, but including wars, climate change, significant shocks in financial markets, for example. So think about the causes of and the effects of demand and supply side shocks, and the policies that governments might be able to use, including central banks, to absorb the shock effect. And a really important point, particularly for an EdXL student, please do revise the economics of transnational corporations, the impact of and regulation of transnational corporations from Samsung to Google, and also transfer pricing, the ways in which transnational corporations try to avoid paying tax legally. Keep in mind, of course, there's now a new global minimum corporation tax rate, in theory, introduced, countries adjusting to that, of 15%. The world economy is changing. I'd love to show this slide in my talks. As of 2022, in fact, advanced economies, the likes of Germany, Japan, the United States, the UK, they only had 42% of the world economy, world GDP, whereas emerging market and developing countries had 58%. And that balance continues to tilt away from rich nations towards emerging countries, which are growing more quickly. The European Union, minus the UK, it now has less than 15% of the world economy. And Africa, sub-Saharan Africa, all the countries in sub-Saharan Africa, from a development perspective, together Africa barely climbs above 3% of world GDP. If you adjust for PPP, actually China is now the world's biggest economy. I mean, it isn't if you measure it at market exchange rates. But if you do an imperfect PPP adjustment, China's now bigger than the States. Could there be a question on China, for example, which has suffered significant financial distress and fears of deflation in China? India has more than 7% of the world economy, adjusted for PPP. Then Japan, then Germany, Russia. The UK comes in eighth biggest economy in the world on a PPP basis. Fortunately, just ahead of France. Here's an interesting chart. Again, context matters. So Brexit. Britain's moving away from single market trade with our nearest neighbours. Of course, that decline has been happening before Brexit. Go back to 2006, 54% of our exports were with fellow European Union countries. But as of 2022, only 42% of trade was with the EU. And of course, that's part of the reason why the UK is trying to find trade deals around the world. And again, think about trade imbalances. Countries that are big exporters, who knows, examiners often choose countries where trade is a massively important part of their GDP. It's true for lots of small countries, particularly when it comes to tourism. This chart shows the leading export nations in the world last year. China way ahead. United States, Germany and Netherlands come third and fourth. And the UK does appear on this chart near the bottom, but below Mexico. Mexico is becoming a huge exporting nation. In fact, I think Mexico is so important, it even figures twice on my chart. I'll have to check that. My third focus today is just thinking about countries. So you'll have to revise about the UK. You'll have to have a bit of knowledge on the UK, but it's always good to have a little bit of knowledge on different countries. You don't have to be, it doesn't have to be encyclopedic, but if you have studied one or two countries, maybe as part of a revision group, always good to put in by way of context. Context improves the application. I've chosen 8 for you. Mexico, I've chosen because it's an incredibly interesting country. Very strong inward FDI due to the MCUSA, the trade deal between Mexico, Canada and the United States. Huge number of, including Chinese car makers, relocating to Mexico, finding capacity in industrial parks in North Mexico and then trying to re-export into the States and avoid tariff and quota barriers. And the impact of outward migration for Mexico is hugely important. Vietnam, really interesting, always interesting country, fascinating. The benefits and costs of strong FDI and an export-led growth model. I heard recently that Samsung accounts for somewhere between a third and a half of all the FDI into Vietnam, and they're using it as a hub in Southeast Asia for manufacturing smartphones, TV screens and what else. India, I think, is really interesting for lots of reasons. I know many students revise India, in part because of the big contrast in demography between India and China. So China, of course, aging quite quickly and population perhaps declining. India has a population sweet spot for the next few years, certainly. And India has actually been deindustrializing in recent times. The share of GDP going to manufacturing has been falling. So might they pick out the India's Made in India strategy, which is a series of supply side and fiscal initiatives to try and get the Indian economy to industrialise and grow manufacturing to scale globally. Bangladesh, really interesting country. Heavy reliance on textile exports, of course, perhaps too reliant on garments. A country that's especially vulnerable to climate change. Croatia, much smaller economy, joined the euro in January 2023. Heavily tourist sector. Arguments for and against a country like Croatia joining the single currency would be a great question. Lots of news about Turkey. Slightly idiosyncratic monetary policy under Erdogan, but they've had really super high inflation. Interest rates of 30% with inflation of 50%, a very weak currency. But of course, they're part of the EU customs union. So perhaps a focus on Turkey as a country with a close trade relationship with Europe, but facing big macroeconomic difficulties. I like looking at Morocco. I mean, really interesting, the scale of the investment in high-speed rail in Morocco to sustain their tourism industry in particular, and enormous investment in solar power, building some of the biggest solar power plants in the world with a view to exporting renewable energy through pipelines and things to southern Europe and beyond. And then a country close to home, so who knows, Ireland. It's got a per capita GDP now, GVA or GDP way higher than the UK, something like $80,000 per capita, whereas we're at 48,000. The economy's been through the mill. It had a financial crisis back in 2008, 2011. But now the economy's booming again. What are the causes of that? Productivity, value added per capita has surged, but is that boom real or is it artificial? Is it largely the result of of inward investment, which may or may not be sustained. So you can see from this little page here, loads of countries you might want to have a little look at. I don't know what's going to come up, but the example will choose countries, including the UK, or maybe groups of nations as an international focus. What they do is they try and choose countries where something really interesting is happening and get you to apply the economics that you've been taught, the analysis and the evaluation you can bring from what you've been taught, basic theories and things. Can you apply them successfully in the exam? There we go. I hope you found this useful. I just wanted to work through paper 2 and some hot topics. Keep an eye out for our daily live streams as we head towards the paper 2 exams. And of course, lots more resources on the Tutor2U website. So this is Geoff signing off, saying stay happy, stay positive, stay curious, and I hope we see each other again sometime soon.